Hello traders everywhere, Adam Hewison here coming to you from the digital studios of MarketClub. We're looking at the big picture for gold. I've shown you this trend line before and how important it is in my mind, broken above the trend line right here. And the reason why this is a valuable trend line, because we're coming from a high and we've actually hit it in three places: here, here, and again here. It's very important to have a valid trend line to have 3 points at least touching. That makes it more valid. If you have 4, it's even better, but 3 certainly is the minimum you should have on a trend line. We've broken over the trend line right here, you can see it, and then we've come back down and retested the lows of the trend line. Now it's important to see how far this pullback came, and the pullback itself actually came back 61.8%, which is a classic Fibonacci retracement, and I'll show you that in just a moment. In fact, let's do that right now. So let's go to like a 6-month chart. And I'll show you with our Fibonacci tool, which you click right here. Click on the highs, drag it to the bottom, to the lows right here. And you can see how it just touched that area, the 61.8%, which is around 1280. So this is an area where the market should find support. It did find support. We've had a big update today. In fact, we're up 1.41%. This is the biggest move we've seen in this gold since we had this move here back on the 20th of June, and that was a move of 2.91%. So this is a very big move and not to be ignored. It's coming from a very important cyclic low period. And what I want to show you is the cyclic low period that we're looking at is right here. So first of all, you want to look at the recent lows that we've had, and these are the lows right here. There's a low period right here. We've pointed this out before, low period here. And if you measure from here to here, and then project that over here, it gives you this low period right here. So we're at a low period. We're oversold, just like we were before here and again here. So we're waiting for this line, the MACD line, because we're looking at the MACD indicator, to just go over the red line. So the blue line going over the red line, that would be an indication that we've turned around. Now the other turnaround we've seen is this, and I'm going to clear the screen just for a moment. But remember this, just remember this situation here, this cyclic low. This looks like a large, if we just draw a trend line right across here from the highs, it looks like a very large head and shoulders formation. If we're correct, and this is a head and shoulders formation, you can almost count $100 up from the levels. So we're looking at this market to go to the 1430 to 1435 area. That's being a little bit conservative, but that's where we think the market can go, particularly if it breaks out over this level right here. So here's another technical indicator that we're looking at that just give a very short-term clue today. I'm going to be looking at our on-chart studies, and that's going to be our parabolic stop and reverse developed by Wells Wilder, PSAR. And you can see how the market just jumped over that level today and climbed to its best level in several days. Also, when we put our trade triangles on, two things stand out there. One, the daily just turned positive, 1295. The weekly is still red, indicating the intermediate term trend is still negative or down, and the longer term trend is still green from 1331, meaning it's positive longer term. So again, we have a conflicting signals here, which could be resolved if we see this market continue to move higher, which I think we will do. And I'll tell you the reason why I say that. So here we have the potential head and shoulders coming from a very oversold condition. We've got the parabolic that's plus. We have the 3 days that's plus. Now here's why I think this market can do better. So we scope this out further. And let me just take this off for now. And let's look at where we see these cyclic periods occurring. So a little more further out. So here's what we're looking at in terms of the big cycles and where we think this market can head. First of all, we have a major high here. So we went up and then down. We come back up again. Major highs. Remember, these are lows. That was a major low right here. So we've had 3 major lows in this section here. We have a high. Now, if we project this high out, it actually takes us into mid-September. So if we're right, by mid-September, we should see gold trading at the 1430 to 1435 level. That's it. That's what we're looking for. So watch gold very, very carefully. I'm Adam Hewison for MarketClub. Thanks for stopping by. I hope you enjoyed this quick look, the spotlight on gold, and I hope it's helpful to you, and I hope you make a lot of money using it. Have a great trading day, everyone.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.